If you've ever wondered, what is an LLC? What is a corporation? What is a W-2? Well, hopefully after today, you'll have a little bit better knowledge on how to move forward. Let's do it. What's up, y'all? My name is Sean Slaughter. I am a real estate agent and investor. And today we are talking about business structure, setting up your organization. Why is this most important? It's really important because it's not only about the money that you make in the beginning, but it's how much you keep at the end. We are talking taxes. Did you realize that you can actually increase your earnings every single year by paying less taxes? Now, we all get upset when we hear Amazon paid no taxes and Google paid no taxes. And as a matter of fact, some of these huge, large businesses actually got tax refunds. It makes us upset, right? Well, you can take advantage of the same thing. It's the American way. So let's go ahead and jump into it. All right, so first I want to talk about the W-2, the LLC, and the S Corporation, okay? Now, warning, warning, warning. I am not an accountant. So this is not going to be an exhaustive, we're not going to be digging deep into it because there's so many things that I can talk about when it comes to a W-2, LLC, and S Corp. So I would always advise you to get a great accountant. I have an accountant, and my accountant is a wonderful accountant because they understand small business. That's one great piece of advice I can tell you. You have accountants that take W-2s and basically file them and they charge you, $40 or whatever. No, you really want to get an accountant that understands, hey, I'm a business, I'm an entrepreneur, I'm a real estate agent, and I'm making income. I need to deduct expenses. I need to know how to best run my business so I can pay less taxes at the end. As a W-2, what is a W-2? This means you work a 9 to 5. As a teacher, I worked a 9 to 5. And so I got a paycheck, and at the end of the year, they gave me a W-2 statement. That statement showed me, here's how much money you earned. Here's all of your deductions, whether it's health insurance or dental insurance. Here's the taxes that were already taken out. And here is your net income after all the expenses, all right? And that's important. Your gross income, the amount you make before taxes, minus your expenses equals your net income. One book that I would definitely suggest that you guys read is Rich Dad, Poor Dad. And he goes over one of the, to me, the most iconic ideas, the cash flow quadrant, all right? Being employed, being self-employed, running a business, and being an investor. Maybe that's something that we'll actually go over, the cash flow quadrant. It's changed my life. But one of the major things that I learned about the cash flow quadrant is, as a W-2, it's very hard to become wealthy. It's extremely hard to become wealthy. Usually the employees that make the most money, there's an ungodly amount of taxes that comes out of their, out of their income. So they may make $400,000 or $500,000 a year, which typically is what your highest employees make. But the amount of taxes that come out are ungodly. They come out before you're paid, okay? You can't itemize your taxes. You can't tell them what your expenses are. It doesn't matter what your expenses are. Those taxes are coming out. Tax refunds, I need y'all to get this. Tax refunds are a return of what you've overpaid. We are so happy to get a tax refund. And all a tax refund is that you've actually given the government too much money, and now they're just giving you back the overpayment. All right? That's what a tax refund is. It's an overpayment. If the government gives you back $3,000, then that means that you've loaned the government $3,000 tax-free, and you cannot control your tax liability. You cannot control how much taxes you want to pay, all right? That's all I'm gonna talk about W-2s, because this really is a business conversation. So let's talk about the LLC. It is a business structure. That's key, and you'll see when I get to the S Corp. It is pass-through taxation. The business does not get taxed. All right? ABC Realty Group is not getting taxed. The people that own the business in an LLC, they're called members. They're going to get taxed. So if the business makes $100,000 and there's 2 owners, then that $100,000 gets passed on to those two members. If they own 50% each, then that's $50,000 for one, $50,000 for the other one, and they'll get taxed on that $50,000. It passes through, right? The money passes through to the members. It could be single or multiple members. So I have an LLC. It is a single member LLC because I am the only member, or you can have multiple members. That's kind of on you. You can itemize deductions. One of the beautiful things about starting a business is itemizing deductions. If your business makes $50,000, but you've spent $30,000, how much is left over, class? $20,000. You'll get taxed on the $20,000, not on the $50,000. That's the beautiful thing. So if your business goes out and buys computers and buys, for me, because I'm doing these videos, I bought camera equipment and I can expense that. All right. There's certain things that you can buy that can be business expenses that you can expense under your business that'll make your tax liability low. That's why itemized deductions are a beautiful thing. So you are in control of how much taxes you pay. Like I said, taxes are simple to do as an LLC. All right. You cannot be sued personally. This is the main reason that we even form a corporation. If something happens and somebody wants to sue us, they cannot sue us personally and get our personal houses, our personal cars, garnish our personal paychecks. They can only get what the business owns. And even that has limitations. You will pay a 15.3 self-employment tax on all profits. This is one of the downside of the LLC, is that 15.3 self-employment tax. It's not totally bad, because remember, if you can get your expenses high enough, then you may be paying 15.3% on a small amount, okay? I remember when I first started years ago, this is when I was a recording artist and I had a record label that was an LLC. In our first couple of years, we really didn't make any money. As a matter of fact, our expenses probably exceeded our income, which means that we made zero. And so how much taxes do we pay? Zero. So that's the LLC. So the S Corp, it is a tax classification. All right, here's why this is important. LLC is a business structure. It's how you structure a business. But the S Corp, it's a tax classification. It's how you want to be taxed. There are certain things out there called an LLC S Corp. You organize your business as an LLC, but you choose to be taxed as an S corporation. I'm not going to get into that in this video, and I would suggest that you do some research on that. It is something that I am doing for this year, all right, for 2021. I was an 2022. I was an LLC for 2021. And because of the amount of money that I made, in order to save money, I decided to have my LLC taxed as an S corporation. Same thing as an LLC. It is pass-through taxation, pretty much. It is a pass-through entity, which means the taxes pass through onto those that own it. Okay. And you'll see what I mean by pretty much, but that's technically true. Taxes are a little bit more complex. Okay. There's things like cost basis and all these other type of things that you can take advantage of in an S Corp, but it's a little bit more complex. You definitely will need an accountant for this. Like I said, I suggest an accountant for all of it, but it's a little bit more complex. There is no 15.3 self-employment tax. Sorta. All right. I'm gonna give you an example, but you get rid of that 15.3 self-employment tax. All right. The owners are shareholders. They're not members. Okay. So your owners actually own shares of the company. You can say, I have 100 shares, and let's just say you and your wife are the owners of the company. You can own 50 shares and your wife can own 50 shares. My wife has her own psychotherapy business, and she's an S Corp. And we both are owners. She owns a majority shares, like 50, let's say 55%, and I own 45%. Okay, she's a majority owner of those shares. Again, you can itemize deductions. You are in control of how much tax you pay. Here's one of the things when it comes to an S Corp. Okay, an S Corp, the first owner must be an employee and will get a W-2. Which means you have to do payroll. We'll kind of get into that. And you'll pay federal and state income tax, Medicare tax, and Social Security on that salary. So, as an LLC, when I'm an LLC, kind of put it up here, I pay myself through a draw. What does this mean? Let's say I have two accounts. I have a business checking account and I have a personal checking account. Let's say that I make $50,000 and every 2 weeks I am paying myself $2,000 and I just transfer it out of the business checking account into my personal checking account. That's considered a draw. That's how I pay myself, okay? And the rest just stays in the business account. With an S corporation, you actually have to set up payroll, because if I want to pay myself $2,000 every 2 weeks, I can't just transfer it from the business checking account to the personal checking account. I actually have to have like a payroll software. I use a payroll software called Wave Apps. It's kind of like QuickBooks, but I use that to organize all my accounts plus do payroll. So because my wife is the, I'm gonna say the first employee, what I should say is a working employee. So if the owner works within the business, for my wife's business, I'm an owner, 45% owner, but I don't work in the business. She actually does therapy. She works in the business, okay? So she gets paid through payroll, a direct deposit. So what's funny is it comes out of her business account. My Wave Apps will deduct federal and state income tax according to whatever Virginia does, Medicare tax and Social Security tax, and then the remainder gets deposited into her personal checking account. And then my Wave Apps takes that federal, state income tax, Medicare, and Social Security and pays that on my behalf. Okay, you can actually pay it on your behalf, but it's easier. That's what, when somebody says I have to do payroll, that's what they mean. I'm going to insert her hours in, how many hours she's done. It's going to calculate how much taxes that she owes automatically. It's going to deduct those taxes by holding it. It's going to pay her the difference of that, and then it'll pay the taxes for me. That's one of the major differences in an S corporation. If you are an owner of the company that works in the company, you must treat yourself as an employee of the company. Shareholders will only pay federal and state income tax on profits. Now, why is this key? Okay, so, and you cannot be sued personally. Kind of break this down. So my wife is an owner of her company, but she's also an employee. She's a shareholder, right? She's an owner of the company. She's a shareholder, but she's also an employee. So let's just say that she makes $50,000. But let's say that out of that $50,000, she pays herself as a salary, W-2 employee, she pays herself through payroll $30,000, right? If she pays herself $30,000 as an employee, she's going to pay federal and state income tax, Medicare tax, and Social Security on that salary. Well, what happens to the other 20? Well, that is her shareholder profit that she'll only pay federal and state income tax. And usually that comes on a K-1. All right. So if you are an owner worker in your S corporation, you'll get a W-2 and a K-1. You'll get a W-2 because you're an employee of the company and you got to pay your Social Security and Medicare and federal state income tax, but you're also a shareholder. So you get a K-1 that says, hey, shareholder, you have to pay federal and state income tax. Because I'm only a shareholder, any profits that come from her business, I only pay federal and income state tax on those profits. right? Because I'm not an employee. I'm not a therapist, all right? So I'm not seeing clients. That ain't my gift, all right? So hopefully that's clear. So I want to show you what this all means and how this works, because I am a visual learner, which I know many of you are, okay? So let's just say I own an LLC. Let's say my income is $100,000. Let's say my expenses, utilities and computer equipment and furniture and advertising and marketing is $30,000. All right? My dog is snoring. My net income is $70,000. Okay? That's my net income. But you have to take out that 15.3% self-employment tax. You got to tax that $70,000. And the 15.3% tax on 70 grand is 10,710. 70,000 minus that tax that I owe, my final pay is 59,290. All right? Does that make sense? And so you can also see how if I increase my expenses, this is why sometimes my accountant will be like, Sean, it's like December. You got to increase your expenses. Buy some stuff, right? So let's just say my expenses are $30,000 and I go up to $60,000. My net income is $40,000. Right? Same money, the same money, but my expenses went up. So what is 15.3% of $40,000? 3%. So that's $6,120 in taxes that I have to pay. All right. And so I'll do 40,000 minus 6,120. And so my final pay is 33,880. So you might say, well, Sean, why in the world would I want to increase my expenses? Number one, you see how I just reduced my taxes by $4,000 by increasing my expenses? Also, what if one of your expenses is a car? I remember that we had our accountant call us and say, it was like November, and our accountant was like, you're gonna make a lot more money than you did last year, which means you're gonna get a bigger tax bill. You need to buy a car. We went and bought a car, all right? $30,000 vehicle. And that $30,000 is a business expense, right? We use it for business. That increased our expenses by $30,000, which reduced our income, which reduced our tax liability, which reduced our final pay. But within that expense is a car. You know what I'm saying? So within those expenses, you're spending money on things that your business can use and you might use as well. All right, so hopefully that's clear on the LLC. Let's go to the S Corp. S Corp is not as clean as the LLC. This one's gonna be a little more difficult to explain, but you're gonna see how you can actually, let me go get my numbers back. You're gonna see how you can actually pay less money in your LLC. Because remember, all that income, that net income, the income minus your expenses, gets taxed 15.3%. Let's go to the S Corp. I make $100,000, right? Same expenses, $30,000, net income of 70. Now here's the difference. With the LLC, they just tax the 70. On the S Corporation, I split the 70 up into two pots. Okay? This one pot is my owner employee salary. So it's remember, I'm an owner / employee. So this is the salary I've decided to pay myself. I just made that decision, $50,000. And in an S Corporation, you have to pay yourself similar to what other people make. So if my wife's a therapist and the average therapist in Virginia makes 50 grand, she has to pay herself 50 grand. What some people were doing as an S Corporation was they were paying themselves 20 grand so that they can pay way less taxes. And you will get a nice friendly call from the IRS if you do that. So pay yourself what those in your area typically make on average. So again, here's the difference. One more time. LLC, income 100, expenses 30. Your net income of 70 grand gets taxed 15.3%, the whole thing. This 70 grand, when it comes to an S Corp, I split it up. I'm going to pay myself $50,000 as a salary because I'm an employee in the business, as my wife is. The other, I'm going to take as owner earnings because I'm a shareholder. So now, instead of paying 15.3% on the whole thing, and I want you to kind of follow me on this, you're going to pay 7.65%, which is just half. It's actually half of 15.3%. You're going to pay 7.65% for Social Security and Medicare, plus your federal and state income. Okay, so it's similar to the LLC. The only difference is you're paying half. Your business pays the other half, the 7.65% of the Social Security and Medicare. All right. So we're already getting some savings already. Number one, we're getting savings because you're paying 7.6% of $50,000 for Social Security, Medicare, plus your federal income state tax on that. Your business is going to pay the other half of the Social Security and Medicare, all right? Because altogether, that's actually 15.3%, okay? Your owner's earnings, you only pay federal and state income tax. You do not pay that 15.3%. You do not pay Social Security and Medicare. That's the beauty of the S Corp, is that the profit that you're getting, you can split it up. If you work within the business, you can split it up and pay yourself a salary. That'll get taxed, 7.65%, Social Security and Medicare plus federal and state. Your business pays the other 7.65%, and then your shareholder earnings, your owner's earnings, the other $20,000, which actually is what's reported on the K1, you only pay federal and state income taxes on that. So you pay a little bit less taxes than you would on the LLC. So which one should you choose? This is what my accountant told me. If your business makes under $75,000, do an LLC. It's simpler, it's easy. You don't have to go through all of that. You don't have to pay payroll. You can just do draws and transfer money over from one account to the next. But if your business makes over $75,000, she suggested that I go in S Corp, because now that same money, instead of taking it in an owner's draw, now what I'm going to do is I'm going to pay myself as an employee. I'll get a W-2 at the end of the year, but a portion of that I'm going to break off and take it as a shareholder earning and get taxed less than I do as an employee. And that's where your savings come in. All right. I just wanted to give you a quick overview. This is not exhaustive. There's way more things that I could have talked about, but this will give you just a starter. This is just a starter. Baby steps into understanding the difference between an LLC and an S Corp. And as you can see, you have a lot more control over your money as a business than you do as a W-2. If you are an employee, I'm sorry, but you can't take advantage of the LLC or the S Corp tax benefits. Always consult with an accountant for expert advice. Always consult with an accountant for expert advice. So hopefully this is helpful. You guys be inspired. I want you to go out there. I want your business to be booming and banging. I don't want you to be afraid. And if you are, I want you to walk through that fear and do it anyway. All right. This is the House of Motivation, the home of inspiration. I'm Sean Slaughter.